Evening all, hope you're doing well. We're in a state of caution now. We were in a state of fear yesterday, and I was saying how we could be a little bit risk off, and we did actually turn out to be fairly risk off, not massively, but the indices have been negative. And so that was a good test, really, because this is still new for us, are these phases. And what it does, it calculates how many cells are green or how many cells are red. And we had quite a lot of red cells on our risk calc, and the indices fell. So that was good. Now, caution means that we are a bit mixed. Okay, so the fear starts creeping in, investors become cautious, but the overall sentiment remains positive. That's correct because there are a load of bears left in the equation. There's 34 bears versus the one bull, which is bonkers. But I think we might be topping out. You'd think we'd be topping out. I'll show you some the US 30 and the S&P. S&P looks like a trap, and the US 30 looks like it might continue to fall. So we might see like a rotation out of those indices, perhaps out of industrials going into maybe tech. But I'll show you when we get there. And DAX is looking pretty bullish. So overall, you think perhaps we should be topping out, but looking at the indices, perhaps not, because the big picture sentiment. And I think what's going to happen, I'll show you S&P. In fact, let me just grab this across. So I've already done this analysis on gold. We've got head and shoulders pattern. They'd sold it at the right shoulder. So this is the head. This is the inverted left shoulder, inverted right shoulder, and they'd sold at right shoulder support. And so we're probably going to come to 2185, and that's where the stop loss cluster is. So that's gold, fairly easy, quite straightforward. S&P is making a obvious flag pattern. Okay, so we've got a descending channel, and what I think is going to happen is that we're going to have a break of this channel. 90% of the technical traders would have spotted this. I think the hourly is a common time frame. However, those 90% of technical traders don't have the sentiment on their screens. They're just looking at this, thinking, well, I mean, we have a break of the channel. It'd be a failed flag pattern. It should be bearish. I'll sell it. And of course, they don't realize that if they're doing that en masse, then this is going to tick down and it's going to be a buy. All right. So this is why this sentiment's really, really powerful. And this is why you need to get the sentiment on your screen. So then you get a big picture view and you understand how traps are made and stuff. So if you imagine just looking at that without this bottom window, that could be quite bearish. We have a break of the channel. Perhaps it does fall fairly heavily. And then you're right, I'm going to get a really good trade. I'm going to sell this. I might even go all in and get really bearish because this is the top, right? But not necessarily the case. If they all sell en masse, we're going to get the buy. So this development here, this crossover is going to be very, very interesting tomorrow when we examine the sentiment. So what's normally happened is that they've been conditioned to sell at any news bite. If they see anything, recession risk or Israel or Taiwan or North Korea, they'll just click the sell button. Sell, sell, sell. Now this looks like it might be the case where they're just changing their mind and they've been conditioned to sell, but that conditioning is wearing off. And this is why this crossover is going to be really interesting. See, if it comes up higher, it tells us that they're actually looking to buy. And that'll be really interesting. So if they buy, then we are going to be at a top, and then that will be the top, right? So this is how powerful the sentiment is, okay? So this crossover here is going to be absolutely vital for the rest of the week, and perhaps even the coming weeks, months. And we are well overdue a breather, but it all depends what happens here, right? So we have to be careful. And so that's the S&P taken care of. So we'll have to wait and see what happens here. If we do fall, then the dollar's probably going to get a bid, and then our trade setup should be okay. It's on the dollar Swiss, all right? And we've got the SL entry and take profit. I've even given you a 3R target and a 2R target as well. So make sure you check Discord. And the thing is, with that trade setup, the herd have sold EU and GU, but they've also sold dollar Swiss. So it's a little bit of a funny one. I knew it was going to be a strange day because we were in a state of fear, and we just we went from fear to caution, but we didn't really know what they were going to do with their dollar exposure at all, and it's fairly frustrating. If we come to the risk calc at this graphic, we had the indices softer on the day with a higher VIX and a higher 10-year Treasury yield, but yet the dollar was negative. So that doesn't make any sense on a correlation perspective. So I kind of knew would be slightly a bit funky, a bit wishy-washy today, because we're in a state of fear, and you'd think that in a state of fear, you'd think that the dollar would do okay, but it actually got crushed. So I don't know how legit that is, and we're just gonna have to wait and see how things unfold. So it's a little bit naughty because that should be positive if the VIX is positive and the 10-year Treasury yield is positive, while the indices are negative. So this is being quite naughty. So this one is probably lying, and while we're talking about the Dixie, we can come on to the robot. And it's possible it just might want to grab our stops, not our stops, but stops above. Now the SLC is at 108.45. The one below is at 108. This is where our stops are. So we've already been taken out twice on 2 trades, and if they sell it, we're going to get the buy, which we have done. So remember, the robot is fed from the sheet. Okay, so if the technicals change, then we'll get those signals into MetaTrader 4. So we're just going to have to wait and see. It's just one of those days where I knew it was going to be slightly wishy-washy. The fact that we had fear, which is unusual, and then we went to caution. But you'd think in the state of fear we would have a stronger dollar, but we didn't get it at all. We saw a weaker dollar, which is like quite frustrating, but it is what it is. So EU has actually made more of a sell compared to last week. We are actually at a net level, a sell. At a static level, we're in positive territory, so they're net long. But yet, look what's happening to price. We're going up higher. So I don't know how legit this is. I think this is phony. This is like a retracement, like a dead cat bounce, and it's just come up to retrace. If you place a moving average on here, it could just be like reverting to the mean, where you've got like maybe, I don't know, like 100-day MA. It just might just want to simply zoom back to the MA down. If you understand, like, things can't keep going in straight lines. They have to return and retrace. So perhaps this is just a retracement, and this is actually just like a phony move. But the herder sold it, so up we come. So it's going to be very interesting tomorrow, especially with the S&P crossover. We could be at top on the indices, so it's going to be quite an important 24 hours coming up. And yeah, I guess I can show you the QDB scores, and then we'll just wrap up the video. The market structures summary, we had a poor score on AU, but a very good score today. So that was definitely a no-no to avoid that. And the next one we were looking at, well, I suppose we can talk about EU. Negative score, positive score, so a mismatch. Dollar Swiss has got a positive score, and we had a positive score, so we should be okay. They're very short, but yet prices come down. So no, sorry, price is positive, so that's okay. Oh, it looks like we might be getting nearly filled. I'll have to check that. Let's just check that quickly, and then we'll wrap up the video. Oh, okay, right, that is interesting. So I think this is going to trigger, and then we're just going to have to, I'd like to say hope. It's not really the good word for it, but we'll need a little bit of fortune here. And the logic for that long is this break, and the TP is based on the 4-hourly. If we come here, but we've got to zoom out a bit, and we're going to target that there. And this is going to be a hairy duty resistance up there. So we're going to target some stops up there at 90.80. If you want to get a 2R, it's 90.53. Okay, so I think we will just leave it at 2R, and then we'll just see how we go. So really, we should be okay if we look at the QDB scores, because the market structure summary has got a good score. That's using comprehensive fundamental data, and we're using the QDB score, which is using sentiment and technical. So it's a combination of fundamental, sentiment and technical all in one. So if we get green, it should be okay, right? So this is why it's going to be a good test. I didn't actually take this, just so you know. I was just going to monitor it, but it's probably going to be a case of why didn't I take it? But it's fine because we're still new to this particular column, and that just takes into account all those fundamental scores. Inflation changed, the GDP. The GDP changed, the unemployment changed, the COT data, retail, and both. It takes into account the COT and retail, which is really cool. And it compares the country versus country as well. So this should be really, really good, this particular column. And we're just going to wait and see. If we get to TP, then we'll definitely look at more setups using these two columns. But it has got good potential because the fundamentals are really strong. And we can't really fade the fundamentals when we're looking at like really important metrics such as the COT data. This tells us bank positioning, right? That's powerful. And then we're looking at GDP and unemployment change as well. So big, very powerful metrics. So we should be using the fundamentals on the sheet, and we are, and we're using it in conjunction with the score change, which is sentiment and technical. So it should be okay, but we'll just use this as a test, and then we'll see how we go. So that's today's video, and I'll speak to you guys tomorrow evening.